Hello, Pamela. How are you? I'm trying to have the sound on so we can have some music. Hello, Pamela. How are you? I'm trying to have the sound on so we can have some music. Can you guys hear the music? I'm really good, Pamela. I'm really good. It's very late in Sweden. Oh, it's not that late. It is? Just 1 second. Oh, just 1 second. I know why the problem is. Thank you. Is it better now, Pamela? Can you still hear me? I know. I saw wife. I don't have a wife, Mark. I don't have a wife. Oh yeah. It's really, really late right now in Sweden. No, I say it's not late. It's 10 o'clock in the night. It's 10 o'clock. Can you hear me good, everyone? Can everyone hear me? I know there's something wrong. I know I am the problem right here because I'm not so good at these things. I can't remember how I did it the first time. Oh, it's 2 and Maverick, where are you? Yeah, Mark, I know. I don't know how to do it though. It's really annoying, but we can try to do it like this. Just 1 second, guys. I'm so sorry, but I am not that good at these things. Oh, you're from India. Okay. That's good. We just might... Oh, it doesn't work. How good? I should have done this first, but hey, what can a woman do? Oh yeah, we don't have music. Sorry, guys. I don't have music. But but we can just start. We're starting to analyze in the market. So I'm so sorry, guys. It's gonna be boring without music. I know it's kind of cozy, but we can just start off with Bitcoin on. I was having this on the 12-hour, and did you guys take a trade from yesterday when we saw the market just spiking up and break? Oh, the music was on for 2 seconds. Okay, I'm gonna try to download it, and I can just play it on my... it's too high right now. Is it too loud? Is this good for you guys? Do I need to take it down more? Okay, we'll see. We'll try. You tell me, guys, if it's too loud. Okay, so we are looking at Bitcoin. And we did have this breakout, obviously, from the resistance that we were in. Going back in time, we can see, well, obviously, we did have this breakout. Okay. Sorry, guys. I'm so sorry. I'm trying to change all of these. I don't know why it's gonna do this to me. I know Andy, he did actually help me, but hey, where's Andy when I need him? We can do it like this. You know what? Oh, I think it's better now. Much better. And now it disappeared. Okay, well, right now, just as Maverick said, we're gonna focus on the money. So we did have this we did consolidate, and then we did wait for the breakout. And it's always better. It's always better to look at the higher time frames, because when we're going to the lower time frames, it's so many things that is happening and we can get so confused. And if you are looking at my videos, you know that I always talk about how important it is for us guys to use the higher time frames to see where we can to see the direction. And after that, we are going down to the lower time frames, obviously, and then we're trying to find entries on them. So I did put up these 3 levels right here on Bitcoin, because when we did break this previous resistance that we did have right here, when the market is when the market is in a uptrend or in a uptrend, it usually never comes back down when we are so far away from the resistance that we did break. Because when we are going sideways, it always comes back down and retest the previous support, the previous resistance, previous support, previous resistance. But when we are continuing to the upside, like now, we did break to the upside. We are in a uptrend right now. We did break this previous lower high. As I told you, usually the market never comes back down and retest it. But then we can find other areas, because right now, obviously, the market is very, very high. It's very high up. And what we need to do is that we need to wait to see when the market is pulling back, because we don't want to buy the market when the market is this high up. We need the pullback, because you see what happens if we are just buying right now. If we are greedy, we're starting to buy the market, and then from nowhere we have the pullback. So if you have your entry on the highest point right here, guess what's going to happen to your account? I do believe that all of you already know what's going to happen, because I guess we all have been trading from the high and hoping to see the market continue to the upside, because we don't want to miss the move. We are thinking, if the market does this again, I want to be in the move. So you think the market will go like this. But the market goes like this. It goes down and takes your money, and you're going to be angry, you're going to be sad, and you're going to wondering, why did I do that? Why didn't I wait for it? That's why it's really important that if you miss the move or not, if you did miss this move, that's okay, because the market will always come back down, and then it will continue to the upside or to the downside. So we are always there's always gonna be trading opportunities when we are trading, obviously. But if you miss one trade, you'll have 100 millions of trades in front of you, so there's no need to stress. But I do understand that sometimes it does sucks when you're missing a trade like this. That's okay, as long as you're waiting for the market to come back down again. And when the market is coming back down, we need to see where the market potentially can react to. That's why I'm having these levels, because if the market, I'm taking this level that I'm having around 47,700, I'm basing that off the 1 hour chart. I based that on when I saw the rejections that Bitcoin had around here. I wanted to know, okay, why does the market react to it? Because if you're just looking at the market like this, you have no idea what's going on. So if we're just zooming out, doesn't matter what time frames we are having, you have the previous resistance here. We can also go back in time just to see how it looks, taking a horizontal line, just to see what's going on. And you can see that the market has been reversed at this area. And that's why the market did react to it. And if you were scalping and looking at this, you could actually buy the market around 47,628. I mean, when you're having a stop loss, you have to make sure that when you need to think about the risk and reward. So, but for myself, I can only speak for myself. Depending on where I am taking my trade from, let's say if I'm taking my trade off of this candlestick right here, I see the rejection. So when this candlestick is closing, I'm buying the market. So usually I can either have the stop loss right under the previous low that we did have, but I can also have it's always different depending how the market looks. If I'm entering around here, and we are now at the 1 hour chart, and I can also look at this low that we're having just to be safe. So it's different for me and how I use the stop loss depending on where I am. Hi guys, I'm very good. So depending on where I am in the market and how it looks, I'm trying to have my stop loss at the previous low or the previous high, and a few pips above that, because as you can see, a lot of the times the market spikes up, takes your stop loss, and then it's going straight down. So I'm trying to have my stop loss a few pips above where the previous high or the previous low is, depending on if I'm selling the market or if I'm buying the market. But you should never have a bigger stop loss than your take profit, obviously, because you always want to be more in profit. We're always going to be more in profit. But I'm going to go back to this, why these levels are so important right now. Thank you, Mark. You're so sweet, taking care of me and Andy. But these levels are, as I told you, these levels are so important. And why I'm taking these levels is because we did have it as a previous resistance before, and we had it also as a previous support. So if the market doesn't come back down to to the level that we're having the previous lower high. And if we see the market coming back to level 47684, and always remember it's an area, so it doesn't have to be that specific number. But if the market reacts to it, we see candlestick patterns against it, we can definitely start to trade from that area. If we're seeing huge candlestick to the downside, we are definitely not buying, even if the market is at a previous resistance. But we can then see if the market comes back to around 46,398 to see if the market reacts to that area. Looking back in time, we're having the resistance, and then we start to see movements to the upside if we're having candlestick patterns. But if the market then breaks that level and we're seeing that the market is not respecting it, we have to look back, and now, okay, the market might come back down to the previous lower high and retest it, and then slowly continuing to the upside. So that's why always trying to have always try to see what can happen if the market doesn't do the first thing that you're doing. Always try to have a backup plan. It's really important when you're trading, because with that you'll always be prepared. You always have to be prepared, because the market usually don't do everything that we want it to do. We're all traders. We all know that. We know what the market is doing. Darrow. Someone wanted me to look at. Is this the right one? Oh. Did it come? What's the short name for? Oh, it is Darrow. Okay, but didn't come up. Maybe I already have it. I have so many pairs right now on the charts. Oh yeah, I have it now. So Darrow. I hope this is the right one. If it's not, you have to tell me so I know. Yes, I'll do that one after. So if we're looking at Darrow, we do have, need to look at the weekly first. Right now, it's you can see that we are in a range right here. The market is just going sideways, even looking at the 4 hour. So right now we're just going sideways, and it's really easy, as I always say, it's really easy to lose money in a market that goes that consolidates, because right now we are in the middle of everything. So we don't know if the market's gonna come back down here, or if it's just gonna come back to the resistance that we're having. So to be safe, I would say that you are waiting for the market to break 21.50 and 147.2, or if it's gonna break the support at 15.98952, around that area. Use the support and resistance as a guide, but we can look at how it looks on the 2 hour. You can also do this. You're having different support and resistance depending on what time frame you are looking at. You're having your resistance right there. You're having the support. And if you want to scalp the market, you could definitely do that, but then you need to see the market breaking the support, and then you just might have your target around the resistance that we're having on the 4-hour. Or if we are taking a trade, yes, I'll do that. Blogging Academy. If you see the market break, comes back up and retest the previous resistance, then you just might see the market continue to the upside. The overall picture on this pair is obviously that we are in a downtrend, but something that I think you should think about is this candlestick that we did have since last week's candlestick. When you are having a candlestick looking at like this, it's really hard when you don't have anything to go back to, and if you don't have data from before, it's really hard for us to see, because we don't have a previous resistance or support to look at, and if the market reacts to it. The only thing that we're having right now on the weekly is this resistance that the market can come back down to and retest. But as I told you, this candlestick, this wick that you're having right here, usually the market always fills the wick, and you can see that during the week the market actually did that, came back up, and right now we are having a doji. So it's really hard, and you can see on the daily that we did have the support. We never broke it, we never did a lower low. But right now, as it looks like, is that the market don't have the power to continue to the upside. We just might see the market coming back down again. So at this pair, I think you should be very careful to trade. I think it's better for you to trade. It's better for you to scalp the market when it looks like this, and either to the downside or to obviously to the upside. But on the overall picture, I do believe that you need to see if the market's going to break the support or the resistance, and then we might see an uptrend or a downtrend. So that's what I see. And we are going to Cardano. Was it? Do I have it already? I think so. Yeah, I have it there. From our Telegram group. That's good. It's nice to see you guys talking to each other so much on the Telegram group. It's really funny to watch, but it's like 1,000 messages. There's no way I'm gonna be able to go through those. Okay, starting up with the higher time frames as usual. You can see that sometimes on the weekly we have nothing to go on. It just doesn't look good. We did have the support right here, and we do have the previous lower high right here. So we did have this lower low, lower high, lower low, lower high. Market came to the lower low. That's good, that's good. Oh yes, just 1 second, I'm gonna go through that. So we did have this lower high, no, higher low, I'm sorry, because it never broke the previous lower low. So if we're seeing that the market now will break the lower high that we're having, we just might, if the market comes back down and retest it as a higher low, we are now having a uptrend, because as you know, when it comes to market structure, the market has to break, even if we did have a higher low because it never broke the previous lower low. That's not a confirmation that we are in a uptrend. The market can come back up to the resistance and then just continue to the downside. But when we're having a breakout and we are breaking the previous lower high, and then the market comes back down and retest it as a higher low, if we're only following market structure, that's a sign that we are in an uptrend. And now we are actually using the higher time frames. You can see on the lower time frames, you're having high highs, high lows. The market goes up, goes down. But when we're having the higher time frames to look at, that's the one showing us what direction we're going to. And if we are breaking it, this is the same thing on the most of the pairs. If we're seeing the market breaking it and then comes back down, we are now in an uptrend, because looking at the daily, maybe not on this pair, or maybe we'll see. If we're taking the Fibonacci level on the weekly, we can see that we did come back down to the 50% and we did retest it. And when we are using Fibonacci is a tool for us to measure where the pullback can come to. And so if we are in an uptrend, we want to find out where the higher low will end. And if we're seeing that the market is starting to break to the upside when we are in the Fibonacci levels, I am using the 50 and 61% to take my trades from. That's when we can see that, okay, we are having our reversal now, and then we just in this case we are buying the market because we are now in a uptrend. So everything that did happen right here, that was just a pullback. Looking at the lower time frames is really messy. That's why a lot of people will be confused when they're only looking at one time frame, because they have no idea why the market reacts to the way it does, how it does it, when it's gonna stop. So looking at this looking at the 1 hour chart, it looks like we're going down forever. And using the higher time frames, we can see that we're actually coming to breaking the previous lower high, and that's a change we're having in the market. We were selling, and now we have to start to see if we're gonna buy, or the market just might continue to the sideways. And we have to be very careful about that. No problem. Thank you so much. I am glad I can help. Is there any other pair? I mean, is it Saturday in Sweden, and everyone's partying. But what do? I'm sitting here looking at the charts and do what I love. And I do really support you guys for looking at this live, because when you're prioritizing the time on the charts, even if you're not looking at my live or Andy's live, you are yeah, I'm gonna look at that, Pamela. I'm just gonna look at this. Prioritize trading. If you want to be a trader, you have to prioritize it. It doesn't matter what anyone else says. You have to do it. Pro TA Tips Blogging Academy. You need to understand market structure. Okay, I'm gonna go through these. Okay, looking at the weekly, as I told you guys on the other time frame, or on the other. We are in the Fibonacci level, as you can see right here. We did have the downtrend that we did break. And if we're going to the 4 hour, let's just see. We can take the Fibonacci level right here too, because you can use Fibonacci on all the levels, all time frames. We can take it from the low, and that's around 1.7135 to the high, and that's 1.8579. And if we see that the market is starting to do its pullback, because obviously right now what we are doing on all the pairs, most of them, we need to wait for the pullback. And you need to have these levels. And when the market, if the market comes to these levels, that's when you're starting to react. So if we're coming down to 1.7684 or the 50%, that's 1.7863. If we're starting to see on the lower time frames that we're breaking to the upside, you don't have to wait this long, but the pullback can end right here. So we creating our next higher low, and you can see that we are also respecting the previous higher high. So that's a good sign with this Fibonacci that we're having. So for you who wanted me to go through this, I definitely would recommend, if you don't want to sell the market to the Fibonacci levels, those are the areas that I think you should look after. I entered on 1 point. Yeah, you can totally do that. Yeah, of course you're going to do that. You can just keep your order in, because you can see right now that we're in the upturn, so you should not close your order, but you could definitely go into other orders 100%. That's how you're building your account. Don't wait for, you're in profit now. So yes, Marverick, you should definitely wait for the market to come back down a little bit, and then you re-enter it. But don't close your order. Let's see, FTM, do I have it? I'm looking at FTM USD. Oh, really? These are the charts that looks like this on the lower time frames. Mark, you're so funny, but trust me, it's worth it. It's so worth it. It's really worth it. I remember when I started to trade, and that was 5 years ago, and I think I have been inside ever since then. And when I tried to go out, I was just like, you know what? I'm gonna go home and I'm gonna study the market, because there's no way for me to be here. I have I have more important things to do. And look where that take me. It took me to you guys. Now I can sit with you on a Saturday night in Sweden. It's cold outside, looking at the charts and having a conversation with people from all over the world. It's amazing. It's really funny. Okay, we can also see here at FTM that we did break the structure. But we do have this huge candlestick, this bullish candlestick. We do have a bearish candlestick right now. So if we want to see where we can take, let's see. I need a bearish candlestick to see where I can put my Fibonacci to, and it looks good on the 4-hour chart. We're taking it from the low, and that's 1.37388. You understand what I'm talking about. Is this it's the support, the previous support on the 4-hour, and we're taking it to the highest point right now, and that's 1.51045 and all the other numbers. If you start to see that the market comes back down to the Fibonacci levels that you're having, the 61%, and you only enter the trade if you're seeing that the market slowly starts to go up to the upside. If you're seeing huge candlestick like this, like you have a huge bearish candlestick that goes straight down like this, you are not buying the market. You have to wait. You really have to wait. Okay, so using the Fibonacci level, and you want it to come back down to 0.5% and the 61%. And we can see, we can take a box just to see if the market react, where why the market is there. You can see that we have been here before. The market did spike through it, came back up again. We were having it as a support, came back down, came back up again. So you can see that this level right here has been here a lot of times. So the market has reversed when they came to these areas. And looking now and having our uptrend, because we did break the market structure, we did break the consolidation that we had for a while. So and it can also retest the previous high, as I told you on the other pair too. So if we're starting to see that the market's coming back down here, these are the targets that I think you should look at for enter as a buy. Don't look at, I think you should be careful if you're gonna sell the market. You also need these areas as targets, as a take profit when you're trading. And there was someone LTC. Has anyone started to use both screens? Two screens when they're trading? And if you have, please tell me if it's better. I know it's kind of hard sometimes. Yeah. It's kind of hard sometimes in the beginning, but when your eyes getting used to it, it's really good. You're having your resistance right here on the daily, and it's not that far away. So if you see the market coming back down to if you want to use two screens, you can see that on TradingView you have select layout right here. And if I remember it right, I do believe you have to pay for TradingView, and you can just take the lowest package that they're having, the cheapest, and then you're pushing on the two screens right here. And then you're having both of them. I know my picture is on its way right now, but you will have a I don't know how to say it in English. It calls toggle maximize chart. It's called. You can see it's 4 corners besides auto, and you push it and you'll have both screens, and you're pressing the screen that you want to have, you want to look at. I recommend it, but that's because it's good for me. That's good, Pamela. Then you should be able to use it. And I only have the higher time frames on the left side and the lower time frames on the right side. But as you can see, if the market comes back down to 163.79, that's also the previous resistance that we're having. If it comes back down to it and we start to see a continuation to the upside, obviously start to see high highs and high lows, you'll buy on the higher low. If we take in the Fibonacci from 1.65.95 to the high, that's 1.7.77. You'll have your Fibonacci levels at 169.11 and 168.32. Have that as a first target. If you see the market coming back down, and you start to see that the market is giving you candlestick patterns that shows you that it's not gonna continue to the downside, you're looking for buy opportunities. But if you see that the market is have a huge bearish candlestick to the downside, you have your next target around, as I told you. Oh, thank you so much, Christopher. No problem. It's the target is 163.74. 74. And if you start to see the market break, retest it, then you're starting to look at buy opportunities at the lower time frames. Or it depends on what type of trader you are, obviously. I'm not gonna tell you have to find it on the lower time frames, but as you learn how to trade and you understand how market works, how it moves, I promise you, entering on the lower time frames is the best thing that you can do. Because when you're doing that, you can actually see, for example, right now, you can see that your order started at the wick if you're going to the higher time frames. It's really nice, but that's something that comes with time and also depends on what type of trader you are. I'm not gonna say it's right, I'm not gonna say it's wrong, everyone's different. But these are the targets. You need to wait for the market because guys, I promise you, if you're not thinking about that we are so high up right now. I mean, this is the high that we're having, and what everyone should know, it doesn't matter how long you've been trading, it doesn't matter how many indicators you are using, you're never ever buying at the high. You have to try to control your feelings. You have to stop thinking, oh, am I gonna miss the trade? You're gonna lose your money if you're entering off the high. We can all see that this is way high up. It's too high up. We need to have the market coming back down a little bit more. Was there anything else? Is there any other pair that you want me to go through? Nope. I've been learning to trade for the last year and a half because California was a COVID lockdown. I'm 62 and I want to retire in 2.5 years and become a trader. That's really good, Pamela. You see, I mean, it's never too late. It's never too late. It's never too late, but we have to put the work to it, and that's why I'm really happy that you are here and looking at this link. Who wrote first? Was it? Oh, Pamela. Sorry, guys. Sorry, Mark and Marvick. Pamela was first. I'm taking link after this one. Yes. Okay, we're going. Was this the one? No. Oh. Guys, I've never had so many pairs. It's so confusing. Looking at Matic, it's the same thing. We have the resistance that we did break, the lower high. Remember, always use market structure. Market's always going to show you what it's doing. If you understand market structure, I swear to God, guys, your game's going to change. Trust me. Market structure, that's trading. That's how it's like when you're spelling something. You have to spell it right for you to be able to understand how to read. Oh, sorry, Mark. Sorry. And candlestick, market structure, that's That's trading. This is the language of trading. So if you don't understand the language, how are you even supposed to earn money in the market? How are you supposed to do that? Doesn't matter how many indicators, guys, you're using. Market structure is key. It's key to everything. Same thing here. We're taking our Mark, you're funny. Taking the Fibonacci from the low on the 4-hour chart. I hope you guys can see the number is 1.2283, around that area, and you're taking it to the high 1.34218, etc. Having the first target that the market can come back down to is the Fibonacci level, and that's around 1.2852, and then we're having 1.272. If the market comes back down here, retest it, we just might see a sell and a buy opportunity. And you can take and look at when the market comes to the Fibonacci levels 50 and 61%, look how the market reacts to these reversal levels that we're having. Or if it's breaking that, we're coming back down to the next area, and that's the previous resistance that we did have when the market broke the structure. Also a previous lower high can come back down and be a new higher low. So these are the targets you can look at Matic. Oh, sorry, Mark. I'm so sorry. I'm so sorry. Link. No problem, Pamela. Okay, we're not looking at the 50-minute chart. Looks so bad. Fibonacci level. Hey, John. Nice to see you. I'm gonna look at TRX soon. Okay, we're taking the Fibonacci level. It's in the corner bit just beside your name. It's called selected layout. But taking the Fibonacci level from 25.90104 and yeah, and to the high, and that's 27.70422, etc. The same thing we're having around here. I mean, all of these pairs, they're moving the same. It's just different numbers. If the market comes back down and retest the 50 and 61%, I hope you guys, when you're looking at this, trying to copy and paste the targets that I am having, because I can't say all of these numbers. It's gonna take forever. So take it from the low, and I'm using the 4-hour time frame. And then if you see the market coming back to it, retest it. You can also look at the lower time frames and see how it looks. And the layup. If the market doesn't respect the Fibonacci, you can wait for the market to see if it comes back. Oh, Carl is here. Thank you, Carl. Everyone knows Carl. He's like the best trader in the whole world. If you see the market coming back down to the previous resistance that you're having, if you'll have that as a target to see if the market does continue to the upside, reacts to it. It's much easier to trade against levels. Support and resistance levels, because when it's in between and you're trading in the middle of it, it's very, very easy to lose money. Always remember that. Try to have, even if it's trend lines, support, resistance, always try to have a zone where the market has been, so you can see if it's going to react to it one more time. And someone else was, what was it? TRX. Is this the right one? No, that's wrong. So what I would do right here, looking at the daily, we do have gaps. Looking at the 4-hour chart, we are right now, we just bounced off this previous resistance that we did have. Going back in time, you can see that we almost had it as a support also. And we start to see we did have a lower, the higher low was retesting it, became a higher high, because we are right now, we did break the previous higher high right here. But what we can see the market do all right here too, we can see coming back down to the support one more time. That's good, Pamela. That's very good. If the market comes back to the previous support that we did have, I want to see how it looks on the higher time frames. It looks more clear. Yeah, I do believe you can see the market coming back down to the support, and that's around 0.09362254. Oh, million numbers. And if the market does break, if the market does break this zone right here, we can take the Fibonacci. Just 1 second, guys. Yeah, I like this. I really like this. This is amazing. When you start to understand Fibonacci, it's really good. If the market does break this level that we're having, that I was just talking about, look at this, guys. No, sorry. This is the beauty with the Fibonacci. If we're coming back down to the Fibonacci, and I took it from the, where was it, 4-hour? No, I think it was a 6-hour. I took it from the 6-hour chart. And yeah, I took it from the low that we did have around here at 0.0888 to the high. And that's around, let's see where it is. And the high is 0.0948. If the market comes back down to the Fibonacci levels that I'm having on the chart right here, if we're looking back to see what actually happened before, take the box just to just to see that. Can you see that we did come up here before as a resistance? Came back down, we had it as a support. We did have a fake out, if you want to call it a fake out from that area, but obviously the market did respect. You look at how the market did respect this Fibonacci level right here, taking it from the low to the high. The market just retested it, and that's why we are using Fibonacci. That's because we want to see the the market coming back down, and then after that we just might reverse from it. So on TRX, was it you, Maverick, who wanted to see this? Wait for the market to come, because you can see that we're having this candle, huge bearish candlestick right now forming. Oh, it just went up. But to be sure, and trade's not safe, but depending on what type of trader you are, I would definitely recommend for you to wait for the market to come to the 1561% area. And remember, I took the Fibonacci from the 6-hour chart. And someone, oh, it was Mark again. Oh, this was true. Sorry guys, I'm confused with all of these different Fibonacci. I'm sorry. These cryptocurrencies. Is there anyone else you want me to look at? Excellent. Oh my god, so many pairs right now. Okay, we're starting with XLM USD, and Mark wants us to look at that. Oh, Jesus Lord! If this was me 4 years ago, I would buy the market right here. And then when we see the market coming back down, oh my god! I would be so angry and was like, what happened? Why? Well, obviously we are heading up on XLM. Can take it. Just 1 second, guys. 1 second. Oh. Sorry. I need to do some things right here. When the market is have a huge momentum like we are having right now, we have to go down to the lower time frames sometimes to see if we are reacting to a support and resistance. Oh, that's good, Mark. That's really good. That was like the perfect entry. Why did you enter right there? What? Let me hear you, Mark. Tell me why. Well, obviously it depends on where 29. I hope you did buy it around this area right here. But looking at XLM, obviously we are heading up. It's a huge momentum right now. We can go back in time and see that we do have this huge support going back in time. You can see, guys, that we have been here. We can go back Sometimes it's easier for us to use the line chart because it's so much noise for the eyes when you're looking at the candlestick, especially when if you only want to see what happened before. And if we're going back in time, we're having, and I'm looking at the 6 hour now, looking at the 4 hour, it looks the same but with more candlesticks. Going back to the candlestick chart, this is how it looks. Okay, so why I'm using this level right now is because if the market doesn't come back down, because we are taught when you're Googling and when you're Googling and to see where the market can come to, and market structure is obviously it's going to retest the previous lower high that we're having a lot of times. But this area, this zone that we're having around 0.30, it's so far away from where the price is right now. And when we're having this huge momentum to the upside, sometimes it just gives us a little pullback and then it just continues. So we are having, I wasn't at the chart. Oh, maybe you should not be in the supermarket next time, Mark. I'm just joking. So if we're seeing that the market comes back down here to this level around 0.31 6,400, we just might have the pullback right there. And I'm trying to combine that with the lower time frames. I mean, you can see that we already did retest it. Thank you so much. We did retest it. You're not thinking about it when you're looking at the higher time frames, but when you're looking at the lower time frames, you can see the pullback, the little pullback we were having. And if you saw that the market came back down and retested it, go back in time. I was talking about this in this video that I sent out right before I started this live. Don't be afraid, Marverick. You don't have to be afraid. Just try. That's how you learn, right? Or if you're not going to enter the market, you have to backtest it. Backtest the market. What's going to happen? Mark, you're so funny. Okay, sorry guys. We can see that we did retest it. You can see on the lower time frames. And when you were having, as I told you, the video that I put up before this live, I was talking about looking at the chart like this. I mean, what's going on? If we're taking away all of these things right now, is it like this? You have no idea what's going on. Why does the market retest this area? Okay, we have the drawings on again. Okay, we're going back in time. Going back in time, guys, you can see that we have been here before. It's so obvious. We need to know about these levels. I'm always talking about them. Go back in time. Always ask question. Why does the market? Because we want to buy. If you're buying, we want to buy it when the pullback is done, right? So when you're seeing a pullback, even if it's on the 15 minutes, that's how you're scalping the market. You're going down to the lower time frames. And when you see rejection, I'm gonna confuse you guys with the 5 minutes chart. And this comes with experience, but trust me, when you're using the 5 minutes and you're a scalper or whatever, you're seeing that the market never broke the support. So when you saw this candlestick, you could have entered it right there. When this candlestick did close, you're buying And look at what happened. Thank you, Phyllis, so much. I'm very happy to hear that. I'm very happy to hear that I can help you guys. I do enjoy teaching. I mean, it's a passion that I have, so it's really fun to have this opportunity to be with you. I appreciate it very much. Thank you so much. Looking at the chart. Natalie, have you ever been on the white list of any crypto company? Everyone. Everyone. No, I'm joking. Okay, so we do on the 15-minute right now. We are seeing a huge bearish candlestick right now. So, okay, this is why we need to ask the question: why is this happening? Why is the market reacting to these levels right now? Okay, we can go to the higher time frames also, because I want to see what's happening. And we can take the line chart. And we're taking okay, so if we're going back right now, so we see that the market is reacting to this level right here. So I put my horizontal line. Going back in time, we can see that the market has been here before. Look at this. We had a previous support. Going back further, we have a support. The market came back down to, remember, it's always an area. We had a wick going back even more in time. You had a wick. And look at this. You have the support. The market has been here before. So that's why the market is right now reacting to it, because it has been here for so many times. So many times. Obviously, we want to see how the candlestick is closing on the 4-hour before we are. I mean, the market can just continue to the upside. I mean, it's 2 hours and 30 minutes left of this candlestick before it closes. But if you want to trade off of it, that was the 15. You're looking at the 30 minutes. I want to see how it looks on the 5. You can also, guys, use the Fibonacci level on the 5 minutes. Look at it. Even if the market comes back down, can you see how the market reacts to the 50%? We can have this on and see if the market will continue up. But if it's breaking it, have the previous, what was it? Use the pullback that you're having on the 15 minutes if it's going to come back down there and retest it. But if we are looking at the higher time frame, obviously, because that's it's more respected. Well, on the higher time frames, we're just going to the upside. We need to see the market actually coming back down again a little bit on the higher time frames for us to be able to see where the market can come back down to. So on XLM, just wait for the market to come back down a little bit. I need to have on the higher time frames, I need to have a bearish candlestick for me to be able to see where the market can come to. But during the time, we can have it on the lower time frames. Even on the 15 minutes, we can take it instead of the 5 minutes. We're taking it from the low around 1.3160, from the high 0.3242. If we see the market coming back down to the Fibonacci level 1561%, we just might see the continuation to the upside. Okay, Ethereum. I already have the Fibonacci level right here. Just make sure. Yeah, that's on the weekly. Looking at the let's see, the higher time frame, we are on the 4-hour chart. You can have around 363.60. You can take it, if we're going back in time on the 24th and 22nd and the 24th of August, we can take the box from the wick to the body to have a zone. And now you can see that the market has been respected it as a support and also as a resistance. If the market doesn't come back down to the previous resistance that we did break, we broke to the upside from the consolidation around 3,166. If the market doesn't come back down here, you can have this as a first target. You can also, because it's better to use where the market has been, at the moment. So you don't always have to go back in time, because right now we do have a previous higher high right here. So we're taking the higher high, the previous higher high, as a new zone that we want to trade off and see if the market reacts to it, or if it will continue, if it breaks it, and then we're finding other zones going back in time. So if you're seeing that Ethereum comes back to around 3315 and 3343, and you start to see on the lower time frames that we are going to the upside, we are having higher lows and high highs, high lows and high highs. You can start to see if you're having your entry on the I'm so confused right now, on the higher low, I'm sorry. But that's only if you start to see, let's say you're having a wick on the 4-hour chart, you're starting to look at the. Okay, Maverick, thank you so much for being in this live stream. I'm very happy to have you here. If you see the market comes back down to this level and respect it, maybe a doji or engulfing candle, you're starting to look at the lower time frames and see if you're seeing high highs, high lows, high high, high lows. So on Ethereum, the first target can be 3327, and the next target, if the market does break this level, you'll have the previous resistance that we're having around 3160. So that's the targets for Ethereum right now. Looking at all of the coins, we're very high. We are at the higher high at all of them, and that's not where we're taking our trades from. We're taking our trades from the higher low. Okay, remember that. So that's the target for Ethereum. Well, we can go back to, was it XRP? I'm using Binance and Bybit. Look at, was it? No, where was it? Which one did we have? Where TRX? No. I want to see how the market reacted to the 15 minutes that I had. Was it? Oh, right here. Yeah, it's on its way down. XLM. Is there any other pair you guys want me to look at? Before I go, it's getting pretty late in Sweden right now. It's almost 12 o'clock. Coty. Well, I mean, don't have much data on this pair. What do you think about Coty in this month? So how many days is it left? Okay, during this month, I mean, having a huge candlestick to the upside that we're having right now, it could be possible that the market will continue to the upside. And looking at the lower time frames, we are in this triangle right now, and we are starting to, we did have this downtrend right here. And if you start to see the market, if the market does break it to the upside, and you're starting to see that we're making high highs and high lows, I can definitely see this pair going up. Looking at all the other cryptocurrencies, we are on our way up, so it could possibly be the same thing for this pair too. But we need to break the level that we're in right now, or the triangle, if you want to call it like that. You did have a high right here because we did break the previous lower high around in 0.606. If we see the market, let's see. If we see the market breaking the downtrend that we're having, and you'll see a retest either on the previous higher high that you're having, around 0.613. Look for opportunity. Start to see if the market is on its way up on the lower time frames. Obviously, it's going to be that because it's lower time frames. But if you're starting to see lower, higher highs and higher lows, higher highs and higher lows in the lower time frames, and it will react to this. It will react to this higher, lower high that we're having. So this is definitely an area or target zone, if you want to call it so, that you need to wait for the market. If it's going to break it, if you want to buy the market can also just continue to the downside or respect the trend line and then continues down, respect the support, and then it just might break it. So I think you have to wait for a while right now. But looking at the higher time frames, yeah, it could definitely be on its way up. I do believe that. And I think I have it already. No problem, Kuros. I have it there. Okay, Pamela, so if we're looking at SOL, we can take the Fibonacci from the low, 1.56.990, to the high, and that's 0.4.805. If you see the market coming back down to the Fibonacci level, and the 50% is 165.815. And the 61% is 1.63.830. If you start to see that the market give us candlestick patterns, reversal patterns, that's a target that we can have to see that the market is making our higher low at that area. If it's not going to respect the 100% the Fibonacci levels, because obviously the market goes back down a little bit more and it comes up a little bit more too. So that's why we have to use the zones, because if you're just stuck with one price, trust me, you're gonna confuse yourself so much. We need to have you have to let the market have a bigger zone to move in. So don't confuse yourself, guys, with only with one number. It's always a zone. If it doesn't respect the 61%, you do have the previous high right here. And that's around 162.730. So you have the first target, and that's the Fibonacci levels. The second target that you're having, it's on the higher high. The next target that you're having, you can also use the support that we're having right here, around 156.315. So the market can do this. So it comes back down to the Fibonacci level. And then it comes back down. It doesn't respect the Fibonacci level. You're having the previous resistance. And then you start to see the market coming up. Then you're trying to buy the market, right? That's what we want to do. But if you see that the market doesn't respect the Fibonacci level, doesn't respect the higher high, it doesn't comes back down to the support, because this is the lower higher low that we're having, you just might see the market start to go to the upside again. So please don't confuse yourself. But just because the market comes down a little bit more than you thought, it's not a downtrend. We're just doing the pullback. The only job we are having is to see where the pullback ends, and that's why you're using the levels and see if the market reacts to it. Looking at the higher time frame, yeah. Market structure, if we're following market structure, the market can come back down to 1.51, 0.670, and we're still in an uptrend. That's only the pullback. Market always comes back down and retest. Obviously now we are on the higher time frame, so it takes more time. But these are the levels on SOL. Is there anything else you want me to look at before I end this live stream with you guys? And if you want to go back and look at this this video, I promise you I will take away the first like 40 minutes when I try to have the music on. Oh, thank you so much. Dent. Okay, I'm gonna take the last pair on Dent. USD. Thank you very much, Pamela. I mean, it's really when you're trading, trading is very sensitive because it's a lot of people that always will have different opinions, and talking to a lot of people about your opinion, that can be very hard. You have to be very sure about what you're talking about, not to convince other people, but to convince yourself that you're actually very good at what you're doing. Obviously that comes with experience, but I remember in the beginning when I started to talk to people about trading and explaining and having my first live, you never know. I mean, it's very, very sensitive because you're sitting so much alone with the market, and now you're gonna try to express how you see it. But everyone's learning. Yeah, no, Pamela, it doesn't matter how good you are. It doesn't matter. You're always going to have it. But one thing that I did learn, when you are a trader and you understand trading, you are never, ever rude to other traders. If you're disrespecting and calling out names, and telling people that, oh, that's not going to happen and blah blah blah, that's someone that has no clue, and it doesn't have to be like that. But when you are going through trading and you start to learn, you have to realize that you need to be very, how do you say it in English? Sorry. You have to be very, I forgot the word in English. But you have to be kind, because when you're going through, when you are a trader, you have to, oh my God, I'm getting so tired right now. I'm trying to be a teacher right now, talking about emotions and stuff like that. What's the name of it? Whatever. You need to be very humble. Exactly. Thank you, Pamela. You need to be humble. And if you're not, it's gonna bite you in the end. And that's why I love Carl and Andy. These guys are so humble. I don't think you even know that. I think you know that. I think we all have the same picture of them. But these guys are so good. They're so nice. Doesn't matter how good they are and how rich they are. They're very nice people. Okay, so looking at the last pair that I'm having on Dent USD. It's the same thing here. You can see we have this huge candlestick to the upside right now, and we are reacting to the support. So what we need to do, we need to wait for the market to come back down a little bit. Yeah, Carl from the moon. He's very polite. He's a very humble person. You're having the, you can see that the market, Carl the moon, and Andy, we are reacting to the previous support right now. Can you see how clear this is, why the market is actually reacting to it? So what we need right now on Dent is to see a pullback, just like the other pairs that I was talking about. And you can use the previous resistance around 0.05 to 100. If you see the market coming back down to that level, we just might have our new higher low, because that's the area that we would retest. And if the market doesn't respect the previous higher high, but look at this, because we are having our higher high around between 0.00500 and 4,800. So we are in between here, and you can see that we do have the previous higher high. So if the market comes back down, and retest this area, you don't have to think about this resistance. We're still in an uptrend, so it can totally come back down here and retest the previous higher high that we did have. I don't think it will come back down there. I do believe the target that we're having, if somewhere it would react to, we can also use this. I'm using this because you can see that we did have a small support. So if the market comes back down and retests that around 0.005416, we start to see movements to the upside. That could be the pullback. Always remember, guys, using look at the candlestick patterns to see if the market respect it or not. Yeah, that's good. It's very good having live streams. I wish I could have more this week. I'm actually going to have a live stream tomorrow, I think around the same time, because I want to see how the candlestick on the weekly closes, because it's very important using the weekly candlestick to see where the market can be headed to. So I'm going to have a live stream tomorrow too, around the same time. So I hope to see you guys on that one too. It would be very funny. Okay, so then if it comes back down to the previous support that we did have here at 0.005435, around that area, if you see rejections, if you see candlestick patterns on that set, tells you that, hey, we are stopping here, we're going to continue to the upside. If it's breaking that level, use the previous resistance that we did have here around 0.005185. If it's breaking that level, you can use level 0.004885. If it's not coming back down here and it just continues to the upside, I mean, the market can do that too. It might just consolidate for a while, come back down. But if you see that the market is going to break this area around 0.005770, you're having the previous support that the market is actually respecting right now. If you see the breakout and then the retest, this could be our new higher low. So just look what the market is doing, and when you're having a huge movement like this, you wait for the market to come back down a little bit to have a good entry. Because having a candlestick looking like this on the 4-hour chart, I wouldn't buy, I wouldn't sell. I want to see how it closes first of all, and then we're looking at the lower time frames to see how it does look. Yeah, so on the lower time frames, it looks the same. Yeah, me and Andy, we are gonna do a collab actually soon. So that's gonna be fun. Andy's very good, but looking at the lower time frames on Dent, you're taking it from the previous resistance that we're having, comes back down and retest it, and then we just might see continuation to the downside. If you want to find entries on the lower time frames, you can also use this previous support that we're having. If it breaks it, we just might see continuation to the downside too. But remember that you need to have the levels on the higher time frames as a target. No problem, Emre. So yeah, okay guys, thank you so much for being on this live with me. I'm super happy. It's getting very late, but I hope to see you guys in tomorrow's live stream that I'm gonna have. Maybe I think I'm gonna start a little bit earlier, depending. But thank you so much. I hope you learned something. Continue to have a good day or good night. For me, it's good night.